As said initially, the three major events has passed now. The first is India-US trade deal, which we are awaiting for last many months. Since Diwali, we are waiting for this, and finally it has happened now. So looking at the deal, it's like a fair deal. But many are saying that initially we had 3% only, now they are charging 18%. How we can say victorious? But seeing the uh, Trump actions, and they are negotiating with other countries, even 18% looks like a fair deal, and we will discuss in detail in coming slides. Then the finance minister, the union budget is over, so it's a growth budget. See, generally, when our budget is presented, and when you ask comments to finance minister or prime minister on how the budget is, the presentment, if they ask me, they tell you it is a disciplined budget, like, or it's a growth budget, like that they will tell. And if you see what is in by growth budget means, see, government will borrow more for economic growth, and then the fiscal consolidation will be less. So that is called growth budget, where government is not worried about the fiscal deficit, and they will borrow more money for spending. That is polishly told as a growth budget. If it is a consolidation budget, means the fiscal deficit will come down sharply, and government borrowing will be at the same level or lower than previous year level. That is called a consolidation budget. But this time, if you see, it's a growth budget. I will explain in detail why it is called a growth budget. It's actually positive for the overall economy, but interest rates, it looks like we had bottomed out, because when our government presents a growth budget, the interest rate used to go up because government is borrowing more money, which will crowd out private players, and interest rate will go up when the government borrows more money. And the other important thing which has happened in the last one month is the Q3 results. So from today it will end. Almost all companies would have come out with results by tonight, and and some companies has posted very good results. Some of the companies which we used to track, almost entire list has posted good results, except in large cap Cipla we had some mild disappointment. Other than that, almost all companies has come out with good results, which we track, and we are holding in our PMS. These companies have come out with good results, and big volatility has happened in global markets, particularly in precious metals, where all retail investors were rushing to buy gold ETF and silver ETF. Vertical rally, and with a very sharp fall, it has happened in silver, particularly silver, and gold also. We have seen a meaningful correction of more than 15%. We have seen, and some volatility has come into the precious metals. Generally, when the price during the peak price only, this type of volatility used to happen, but only time has the answer whether we have reached a peak price in silver or gold in near term. And Nifty and Sensex, if you see that, it has around 1%, it has fell in the last 1 month. Mid cap also done decently, 0.5, whereas the small cap fell a lot, 6% it has come down in the last 1 month. And most of the portfolio, that is why though Nifty is just 3% away from all time high. Most of their portfolios, if you see, or particularly retail portfolio, they are anywhere between 10 to 20% they are down, and they are feeling like their market is not doing great, like that they are feeling, because the individual stocks has come down in many cases and in many themes. For example, if you see the solar themes and all, no, the price has fell very sharply from the peak, and some stocks are down by even 50-60%. It has come down in many solar names, like that many individual stocks, they have fell a lot. So the retail portfolio, they have suffered a lot, though the index, if you see benchmark index, it is just 3% away from all time high. And union budget, if you see, that is a growth budget. As I said previously, the fiscal reduction is much less when compared to previous year. Just 0.1% of fiscal deficit is getting reduced in coming year, and whereas government is borrowing more money. When compared to last year, the borrowing was more. That is why after the budget, the bond yield went up, because the government borrowing was more than 1 lakh crore. That is the reason why the bond yield went up after the budget. One positive is that the high government capex which we are doing for the last 3-4 years, they are expected to further increase in the FY27, that is in the next financial year, and most of the spending is going to defense expenditure. It is going, and other railway just at 10%, and all other segments just a modest increase was there. So the big increase is only in defense segment, where the government is planning for 17% more expenditure when compared to last year capital expenditure. So government continue to do capex, so they will do capex till the private big capex will come. But as of now, it looks like that based on the Q3 results, if you see that, it looks like many companies will come out with capex. Private capex will finally start kicking in, because the uh, results were good, and balance sheets also very strong. So most probably the private capex will start coming in near future. And this is the fiscal deficit chart. See, just a modest fiscal consolidation this year. Fiscal deficit as percentage of GDP, if you see in the last 10 years, if you see, so this is during the COVID time. Fiscal deficit went to 9.2%, because government spending was very high, as well as the GDP did not went up, because there was a lockdown in the economy. So the fiscal deficit went up a lot. From there, we have been consolidating, and from 9.2 to 6.7. Then from, if you see in the last 3 years, if you see that in FY24 from 5.5 to 4.8, almost to 0.7% they have reduced it. Previous year almost to 1% they have reduced. Then from 4.8 to 4.4, almost to 0.4% they have reduced the fiscal deficit. And in the current year, if you see that, there is not much difference from 4.4 to 4.3, just to 0.1% reduction in fiscal deficit, just a modest fiscal consolidation in current year. And previously pre-COVID, if you see that, it was around 3.5 3.4% was there our fiscal deficit. So when you compare to pre-COVID time, still our fiscal deficit is high. It's not only for India, globally almost all countries has very high fiscal deficit when compared to pre-COVID period. India somewhat better when compared to other countries. If you see USA and many other European countries, no, they are having much higher than pre-COVID period. So the fiscal consolidation is very modest, 4.4 to 4.3. Actual figure generally we don't tell, sir. It almost my macroeconomy, no, they always tell in terms of GDP only. See, many simple example people used to give. Suppose a person has just 10 lakhs worth of assets, means if he takes 1 lakh loan, means it's almost 10% of his asset. Similarly, suppose if a person has 10 crores worth of asset, if he take even 50 lakhs loan, it's very small to him. So the repaying capacity only we have to see. So that is why it is always told in terms of GDP. If we tell the actual figure, it will be very high, and people will, it looks screaming. Yeah. Yeah, repaying capacity. See, the problem with Kerala and Tamil Nadu, no. Tamil Nadu has more debt than Kerala, but Tamil Nadu has repaying capacity. Lot of industries are coming. See, even last week, if you see it, JLR, they are going to put a big plant in Tamil Nadu. Previously, 6 months back, another big automobile company came into Tamil Nadu. So they get lot of tax revenues. So they have repaying capacity. So yesterday 5,000 rupees Tamil Nadu government transferred to all women, 1.3 crore women in Tamil Nadu, because they have repaying capacity. Whereas in Kerala we don't have. 4 days back in Times of India newspaper, the first page they have written that Kerala financial situation is getting much worse. It's very difficult for them to sustain. The main thing is that the industries are not here in Kerala, and you don't have revenue. Only petroleum revenue and lottery revenue, like that, and this alcohol revenue we have mostly. If you have industry, then you will get other source of revenue. Government borrowing, if you see that, almost 14 lakhs crore government was consistently borrowing for the last 5 years. This is the gross government borrowing. This year everyone was expecting around 16.2 lakh crore, whereas you see 17.2 lakh crore government is borrowing. So sharp increase in government borrowing in the next financial year, that is FY 26-27. So that's what I said. Government is borrowing more money when compared to previous years, and fiscal consolidation is less. That is why it is called growth budget. Growth budget, the negative for growth budget is that the interest rate will not fall, interest rate will start going up. RBI did 3 4 rate cuts last year. We feel that the bottom has been made on interest rate cycle because of high interest rate because of high borrowings by the government, as well as because of the modest fiscal consolidation. The almost we have made the bottom on interest rate.
But sir, the defense expenditure is not directly related to the people on their daily lives.
Defense expenditure, see, government is borrowing this much money for doing expenditure now. And now what government is saying, previously we used to say that fiscal consolidate, fiscal deficit in terms of GDP. Now government is coming out with a new parameter called the debt to GDP ratio. Most probably in the next 2 years, 3 years, no. Instead of saying that our fiscal deficit is 4% of GDP, government will start saying debt to GDP ratio. Government will start saying, even in the budget, our finance minister told that our debt to GDP ratio is coming down, and they have put a target of 50.2% by FY31, 5 years from now. Currently it is 56.1. They want to reduce the debt to GDP ratio to 50.2. So their target has been in terms of debt to GDP ratio. Previously, they used to say that our fiscal deficit will be 3.5% by, as of now it is 4.3. Our fiscal deficit will be 3.5% by FY31. But instead of saying that, in terms of debt to GDP ratio, they have started saying it. What they are targeting is that 50 from 56.1 to 50. Most probably by next budget, they will stop telling this GDP in terms of GDP, a fiscal deficit in terms of GDP. They will start seeing the debt to GDP ratio. They will start seeing 50%. They are saying. If you see some of the European countries, even China, Japan, and all, the debt to GDP ratio is more than 100, far higher than our country. The only thing, no, they took debt and developed their economy. If you see their infrastructure and all, it will be world class. Whereas India takes lot of debt, but still we could not able to improve our infrastructure. So that is the only issue. Because when government start giving money freely to people, means what will happen? It will be used for consumption only. In Tamil Nadu, 5,000 gave. Few months back in Bihar election, 10,000 rupees was given to women. And Maharashtra similarly they gave. So this money, what they will do, they will use for consumption only. 5,000 rupees if they give to the Tamil Nadu woman, means what they will spend for buying silk saree or whatever they like. It is used for consumption. But if government take debt and put a road, means it will be a public. Everyone will use it. So the difference between consumption and investment, both has different uses. Consumption means for a particular time it will only once you can use it, whereas for investment means it will pay off. And this is the capex, which I told it. The capex has been steadily increasing, and for next year, if you see, government is projecting 12 lakh crore, 12.2 lakh crore they are projecting. Previous year it is 11, and before that it is 10.5. So to 12.2 lakh crore, almost 3.1% of GDP they are spending for capex. Is a decent amount. 12.2 lakh crore is a decent amount. You see, FY23, if you see that, it was just 7.4. So in the last 4 years, government spending has gone up very sharply. 7.4 to 12.2 means it's a big jump. Actually, they hiked huge government spending only to revive economy only. Just before election, they want to see a meaningful improvement in the economy only. They did it. What they thought was that along with government, private capex will also come, and it will be a big boost to economy. But unfortunately, the private capex not yet came. So only government was doing the big capex and heavy lifting, and that is also continue for next year also. 12.2 lakh crore, almost 10% they are spending more money on government capital expenditure. And direct tax and indirect tax collection, if you see that, the percentage of direct tax collection is going up in the for the government. In terms of GDP, if you see FY23, 6.2% the direct tax. Direct tax is nothing but the income tax, corporate tax, STT, all these and all will, income tax and corporate tax and all will come in direct tax, because we are directly paying to the government. Indirect tax means the excise duty. Suppose if you buy petrol, if you buy for 107 rupees means the actual cost will be 30 rupees only, 35 rupees only. Balance 70 rupees it is shared, most of the part will go to state government, and cess and all will go to central government, it will go. Excise duty and cess on petrol will be go to central government, and state government also has a big revenue. So that is indirect tax, because we don't know how much tax we are paying on that product. Similarly, if you buy a soap, FMCG item, or any TV, refrigerator, vehicle, a lot of indirect tax are involved in it, because we don't know how much tax we are paying. Whereas direct tax means we individually have to pay. Company, how much profit they are getting, in that they will pay 25%. Individuals, based on our slab rates, individually we will pay it. So only those who are eligible, who can affordable, they are paying the direct tax. Whereas the indirect tax means they will treat it equally. If a poor man buy a soap for the 30 rupees means he will pay the same tax. The rich person who buy the same soap, he will also pay the same tax. So there is no differentiation in indirect tax. Whereas in direct tax, only those who are affordable, those who can afford that tax, they are only paying. Actually, a good economy is something where the direct tax collection should be more, indirect tax collection should be less. That is what a good economy is, because those who are affordable, they can pay in a good economy. That is the one. Those who are rich, they should pay more. Those who are unaffordable, they should not pay more. That is what a good economy tax policy is. So in that way it is going. So the direct tax collection as a percentage of GDP, it is gradually going up, 6.5, 6.7, 6.8, 6.9 next year. Indirect tax, if you see, 5.1, 5, 4.8, gradually coming down. So it's a good tax policy is should go like this only. The direct tax collection should be more, indirect tax collection should be less. Interest expense, because government is borrowing more, the interest expense continuously going up. See, percentage of total expenditure, almost 1/4 is going for interest only. Now if you see in the last 4 years, it is consistently going up, 22, 23, 24%, 25%. Now it has crossed to 26%. For next year, 26%. So if you borrow more money means more interest rate, more interest payment. So that's the negative of high fiscal deficit. So fiscal deficit may be positive in near term. It is negative for long term, because whatever government getting money now, most of the money will go for payment of interest, and the interest is see 26% now it is coming. It will further go up, because now government is borrowing more than 2 lakh crore they are borrowing when compared to last year. So what will happen for 2 lakh crore, around 6.75% interest they have to pay. 14,000 crore extra interest burden will come from next year onwards, because of the high fiscal deficit.
There was an article there which just mentioned that 1/3 of your income will go to
Interest payment, that's correct, sir.
Is correct.
Correct, it will come there. See, major ministry allocation, as I said, only the defense ministry allocation has gone up. When compared to last year budget estimates, no, it is 17% of Ministry of Defense. Whereas Ministry of Finance, it is almost flat year on year, but revised estimates now, because last year Ministry of Finance saw a big increase in spending from 1.8 lakh crore to 2.5. So they are maintaining that. So Ministry of Finance, a lot of schemes are there based on the Prime Minister's name. So all this will come under Ministry of Finance. The Ministry of Defense is seeing a good hike in the capex, almost 17%. Railways just 10% only. These and all base is small. That is why 94% it looks. All others are average only. So the total capex increasing is 11.5%, and the major share is being taken by the Ministry of Defense. So some defense stocks will do well, because government is continue to spend a lot of money on defense. So we have to be very selective in defense stocks. We should understand, because the defense stocks has a long gestation period, 3 years, 4 years, 5 years. Shipping companies and all gestation period is almost 5 years. So we should understand how the different defense companies works, and then we have to selectively buy it, not a blind buy of all companies. So these are some of the macro details. The other details of budget highlight is that uh, the buyback gain from here on it will be next year on it will be treated as capital gain. Previously last year there was lot of confusion and many people did not tender buyback share in the Infosys because of the way the tax treatment has been done for buyback. So government has rectified it. It's a welcome move where now for non-promoters buyback will be gains will be treated as capital gain. So if you have bought it less than 1 year means it will come under short-term capital gain. If it is more than 1 year means then it will come as a long-term capital gain where it is 12.5% tax only. But for promoters the capital gain will suffer higher tax because for corporates it will be at 25%, for non-corporates it will be at 30% tax, which is almost equal to the bracket income tax highest bracket it will come, and for corporates it will be at a corporate tax level it will come because what government is feeling is that many big corporates are misusing the buyback. For example, TCS, no, if they do 15,000 crores buyback means company will pay the buyback tax and Tata Sons will not pay a single rupee buyback 3-4 years back. To avoid that only they totally missed the buyback tax calculation. Now they have corrected it. So if TCS does a buyback means the Tata Sons will pay a 22% tax, which is equal to their corporate tax level. Whereas as a non-promoter shareholders like us, no, we will pay just 12.5 if it is long term, and if it's short term means it will be 20% tax. So it's a big welcome move. What we are expecting is that many mid and small cap companies which who are having lot of cash in their balance sheet, they may start coming with buyback once the budget is passed. So it's a welcome move. The only positive which I see in the budget is this one only, as far as the capital market is concerned. STT hiked for futures and option. It was also not expected. It came as an unexpected move. STT hiked futures almost 150%. They have hiked the STT from 0.02% to 0.05. While for options 50% they have hiked from 0.01 to 0.11% they have hiked. So because of this only the market fell almost very sharply during the budget day. Market collapsed on a Sunday. They put the market. They opened the market and the market was on a free fall on that day because of sharp increase in STT. STT. Also the other reason why the on budget day market fell was that the foreign institutions were continuously selling in our market. So market was expecting that some sort of relief will be given to foreign institutions on taxation capital gain side so that they will stop selling. That did not happen. So that is also one of the reason why the market saw sharp sell off during the budget day. Other highlights, see for those who are keeping the data centers in our country, they will get 21 years tax holiday. This is also a welcome move, but this and all no will take many years to happen. Whereas the STT hike and all immediately it will happen once the budget is passed. So the negative of the budget it will come immediately, whereas the positive things on the budget will take some time. It will take a couple of years or 3-4 years for them to get fructify. 21 years tax holiday for setting up data centers in our country for foreign companies. That is one positive, long-term positive. Recycling of real estate assets of central public sector enterprises. So public sector companies who are sitting on huge real estate land bank, no, through dedicated REITs they are allowed to monetize it. That also one positive. These and all will take lot of time. Immediately it won't come because government companies and all know a lot of procedural things are there. So it will take some time, these things.
But this 21
See, only multinational companies only, foreign companies. Companies like Microsoft, Alphabet, instead of keeping in abroad data center, if they keep data center in our country, they will take the tax benefit.
that means only
Amazon, these companies only.
only foreign.
Foreign companies.
Actually, Anandaraj they got a data center that will not.
That will not get, only foreign companies. So this is about the budget. So overall, if you see on the budget, only positive I see for capital market point of view is the buyback tax. They have changed it. That is one positive. For the economy, if you see, it's a the budget is a growth one. Growth one generally positive for the economy because it will induce growth in the economy. On negative side, the interest rate will not fall much. It will go up further from here only. Maybe it may consolidate from here for some time and then it will start increasing. and the interest rate will not fall because of the budget news. So that is the negative on the budget part. Otherwise, nothing more in the budget as far as the market is concerned. Now the India-US trade deal is a much anticipated trade deal. We are waiting for so long. It was expected that by Diwali time, by November or December, it will come, but it not came. But finally, it was announced, and I think immediately after the budget fall, the trade deal was announced. So budget day, market fell very sharply, and then the trade deal came, market went up very sharply. So it's a tough time for the those who are having options position on the overnight, because everything happening on overnight, and somebody will make huge money, somebody will lose their entire capital. Not much, sir. See, only 10% or some increase in the infrastructure spending. That's all. It will be only for inflation. It will adjust for inflation. See, for railways, 10% they have hiked it. Steel prices and all gone up. So it will adjust only for inflation. No major improvement will come when compared to last year. Trade deal, if you see, the finally it has happened. We are waiting for this, because some of our recommended companies got affected by this US tariff, particularly a company called Avanti Feed, where we have recommended. The price went to 960 after our recommendation from 550. It went to 960. Then tariff, Trump put the tariff. It again fell to 600. When tariff was removed, now it has gone to 1400. So I think many clients will be holding it, because we are recommending a lot in PMS and all. We are holding it, and we made some good money in that. And the other stock, Navaneet Education, Garware High Tech, these and all US related, tariff related stocks. Textiles we haven't recommended any. So the major sectors which were which got positive impact because of this trade deal was textiles and shrimp. And shrimp we had exposure, and we got some positive benefit because of that. And finally, India US joint statement on trade deal, it was announced, and reciprocal tariff will be reduced to 18% from 50. Now already 50 to 25, it has already, the penal tariff was already removed. 20, now 25 to 18, it will happen in the month of March. Most probably in the next few weeks it will happen. Once the signing and the agreement, the US will reduce the tariff. And now it is 25 to 18, it will happen. So 50 to 18, it is going to get reduced. Moreover, our Indian rupee has depreciated by around 6-7%. Our rupee has depreciated. That means the 18, because of rupee depreciation, it will get further reduced to 10-11. It will further get reduced for the exporters, because of rupee depreciation. So overall, India is in a good place because of low tariff and the rupee depreciation. Indian companies could capitalize the US market. On the other side, what India has agreed is that 500 billion from US, India agreed to purchase 500 billion from US in the next 5 years. So mostly what India is going to buy is the oil products. Anyway, we are importing from other countries. Instead of importing from other countries, we will import from US. That is one. The second thing is the defense product, where we are buying from other countries, mainly from Russia and some France and all we are buying. Most probably we may buy more from US, because anyway India is increasing the defense budget. So the additional budget, it may go to US. This is what India has agreed to. And also India has given promise that India will reduce or eliminate tariff on wide range of industrial and agricultural products from US. India has agreed it. Whereas some of the key products, agricultural products and dairy products, Commerce Minister said they have kept out of this agreement. They have said the one condition which is the stop loss US has put is that the US will keenly watch India's oil import from Russia. India has promised that we will stop importing oil from Russia. Since we are importing, they have put the penal tariff of 25%, and now they have removed it, and they have said that suppose if India starts importing oil from Russia, means then again the penal tariff will be slapped again. That is what it has been put in the condition, and we have to see. Our feeling is that India will gradually reduce the Russia oil. It won't become zero. Maybe indirectly it may import from some other countries, but it will show that gradually it may reduce it. And if you see the global stock market economies, most of the markets are doing well. Dow Jones, see, it has gone up in the last 1 year, almost 11% up. The most performing market is the Nikkei, 45% it has gone up. Nifty 11% up. Nifty is showing up mainly because last year the same time Indian market did very badly. In the month of February, Indian market did very badly, fell very sharply. That is the reason why the Nifty is showing 11% bad, because at that time only the tariff was slapped on our country and Indian market did very badly. So why I am mentioning is that when market like Nikkei, China and US and all doing well, why foreign institutions should come to our country to buy it? Because on 11% Indian rupee has depreciated 7-8%. So a foreign institution has got just a 3% return. So instead he can safely invest in a country like US or China or Japan to get higher return. So the only way foreign institutions can come into our country is that if our market starts performing. If our markets once starts performing, they will stop selling and they will turn to buyers. Uh, that's naturally happened to all investors. Suppose in our portfolio we have 10 stocks and one stock is doing badly, means one time people will average, two time will average. Still it is doing badly means no one will buy the same share. Instead they will try to buy a stock which is performing well. The same way a foreign institution, no, they have they invest in multiple countries, 20-30 countries they will invest, and they will try to put more money where it is doing well. Yeah, underperforming country they generally don't put it. Maybe one time, two time they may put. Still it is underperforming means they don't put it. So Indian market has to do well. Second thing is the currency should not depreciate from here on. If currency is likely to depreciate means they will wait for buying. Results, Q3 results, it was somewhat better. See, this time what happened was that the many companies in mid and small cap they did far better. Nifty companies, it was lackluster only. Only metal companies and few auto companies did well. The IT companies which has good weightage, no, they did not. Though the profits were above expectation, it was still muted. And big banks, HDFC Bank, which has the highest weightage in the Nifty. The next highest weightage is Reliance, and both companies the profits were HDFC Bank, I think 10% profit growth was there. Reliance almost a flat profit. So big boys when they disappoint, no, Nifty earnings won't be high. Whereas if you see in the broader market, many companies has posted decent results, and that is why the overall sales was up by 10% and profit is up by 13.5% for the aggregate of 2744 companies. Last year the same time sales was 5, net profit was 10%. So relatively when compared to last year, this time the results were good. And one thing which has affected the profit is the new labor code was announced in the month of November. So almost all companies made a provision because of this. So one-time provisions for new labor code compliance, the profit has come down. Especially for IT companies, now all big companies like Infosys, TCS, they have provided almost 1,000 crores in this quarter because of this, and almost all manufacturing companies and other companies they have made a provision. Because of that also the profit has come down, and mid cap and small cap did relatively well. The sectors, if you see, PSU, banks, metals, auto ancillaries reported good numbers. IT companies posted muted results, and pharma also many companies posted good results. Only Cipla was slightly disappointing. Auto sales, the momentum is continuing, and that's why we are keeping on giving some auto related stocks for our recommendation. Yesterday Jamna Auto came, I think 2 months back we recommended that stock, and it did not fell much after our recommendation in spite of a very weak mid cap and small cap market. And yesterday it went up because of weak market it fell. And a two-wheeler, if you say this is the retail data, so two sales figure will come for auto. One is the wholesale number where company will dispatch their vehicle to the dealers. The second is the retail data where the dealers will sell the vehicles to the public like us. And this is the retail data. And if you see that two-wheelers almost 20% year on year, it has gone up. So month on month we should not see it. because of the seasonality. If Diwali comes, the sales will be very high. December means sales will be less. Like that, a lot of seasonality is there in auto one month wise. So year on year only we should compare it. Two wheeler 20% growth is there. Three wheeler 18.8. Passenger vehicles it is 7.2 only. Maruti and Hyundai and all the sales are not increasing. For Maruti, exports is doing exceedingly well. Uh, Previously they used to export 10,000, 15,000 vehicles. Now they are doing 25. Last month the exports of Maruti is almost 50,000 vehicles. It's a record high exports for Maruti. 7.22%. Tractors 22.8% growth is there. Commercial vehicle 15%. So commercial vehicle, many are saying that the commercial vehicle is turning up. So that is why we keep on recommending this Sundaram Finance, Sriram Finance, because these are the players who are the market leaders in this commercial vehicle financing. Their main business is in commercial vehicle financing. That is why we have recommended this Sundaram Finance. 15% commercial vehicle growth, and overall if you see that 17.6% growth is there on retail data for January, and based on the feedback from the dealers, it is expected that the next 2-3 months also the auto sales will be very strong, which means that the auto ancillaries will continue to do well. Auto companies and auto ancillary companies will benefit more. See, two things are there, sir. Whenever stock price fall no very sharply, we immediately feel that the industry is coming to an end. That happened to all of us. Whenever a textile company shares fall very sharply, we immediately feel that that is the end of textile company. That's how we feel. But reality is something different. See, till now, if you see the all big IT companies now, four major IT companies, they have an attrition rate of around 12% they are having. That means if TCS has 7 lakh employee means almost 90,000 people are resigning their job and leaving to some other company. Where these people are going? Company is not sending them all. Maybe company would have sent 10,000, 15,000 people because of lack of knowledge they may be sending. But still TCS has 12% attrition, HCL has 12% attrition, Infosys has attrition. Where these people are going? They are getting job in some other companies, they are going. Where they are getting the job? Most of my relatives, son and all know, who have completed college, everyone is in job. I went to Madurai last week. Whoever asks, everyone is got some job. Maybe the salary for some may be lower, 30,000, 35,000 it will be. Still after completing their degree, immediately they are getting job means is something not bad. In GCC they are getting 80,000, 90,000 salary. Immediately they are on the joining. Per annum salary is 10 lakhs. Global center, many MNC companies are keeping in India. The starting salary they are giving for a graduate who has completed college, they are giving 10 lakhs salary. Because of stock price fall, we may feel that the world has come to an end. It's not like that. Only time has the answer. Till now Infosys has employees, they are keeping it, they haven't sent out, but the stock price they are falling no, as if the world has come to an end, it is falling. And if you see in India and US, IT services company, SaaS company, service service software as a service companies no, all the stock price fell by 30%, 40% in the last 1 month. They what it has been suddenly told no, that because of AI all these company will lose their business. That is the reason why here also we have fell very almost all company IT companies fell. What they are saying is that the most of the work done by our Indian IT services company, no, it will be done by AI. That's what it is told, and because of that, it is falling. And expectation is IT service company to see revenue fall due to AI implementation. That is what they are saying it. And one thing about this is that after the social media came, no, you can tell an information to all of them at a same point of time. Within 3-4 days you can tell to the entire world. So that is the beauty of the social media. In 2021 what it was told was that 4 years 5 years from now, ICE engine vehicles, that is the internal combustion vehicle no, which we are using now, it will extend. Half of the vehicles globally will be only electric vehicles. It was told in our presentation, you can see it. 4 years back, 2021, 2022, it was told like that, that only electric vehicle is the way out, and GC, this internal combustion engine vehicles will disappear in the next 4 or 5 years. Immediately, some 100 years back, example they will give like people are using bullock cart, and then it switched to the this ICE engine vehicle, and otherwise they will give an example of Kotak camera they will give. Once the mobile phone came, digital camera came, Kotak has lost its way. They give, yeah. But what happened after 4 years? And during that time, everyone told, and what happened? Many companies started putting lot of money in the electric vehicle venture, because it was told that without electric vehicle, these companies cannot survive. So automobile companies were tremendous pressure to spend for electric vehicle. Shareholders will be asking it. You are not spending for electric vehicles. Then 4 years down the line, what you will be doing? Your vehicles will not be sold. You will be out of race, like that. So General Motors and many European company is now big automobile companies. They spend billions of dollars in a electric vehicle. 5 years after, what happened? GE return of 6 billion on electric vehicle venture. Another European company, they return of 25 billion on electric vehicle venture. 4 years after, what they are saying, no, the demand was not as expected. The electric vehicle demand was not as expected. So whatever money we have spent for electric vehicle, we are writing off. Just we can Google and see how much General Motors has written off 3 days back, 6 billion. Similarly, this AI companies, no, they need huge investments, trillions of dollar investments they need. So if they need money, means what, people has to give money to them. So for that, what they have to tell a very tall figure. Then only people will give money. 5 years, 3 years down the line, no IT service companies will be there. Only we will be there. Means then only they will give billions of dollar for them to spend for infrastructure. And if you spread it in this is social media, everyone will get the message, the same message, and they will ask, and everyone will feel that then these service companies will come to an end in next 2 years, 3 years, like that. So no one knows what will happen, but only time has the answer. But with the sudden surge in discussion in social media regarding this topic is highly suspicious. 2 days back, one company raised 30 billion. Anthropic, one company, which is a AI company, they raised 30 billion at a 380 billion valuation. They have raised it. If they tell that AI will take some time to implement, means who will give 30 billion to them? Because at the valuation of 380 billion dollars, you have to tell very loudly that very tall figures. You have to tell next 3 years, all other company will close. Only AI company will be there. See, the problem with AI, no responsibility. Who will take it? That is the issue. Suppose if you are meeting a doctor, if doctor gave one medicine and something happens to you, you can go and ask to your doctor, why this has happened to me. If you search in AI and AI give a medicine to you, and if something happens to you, means whom you will go and ask? The responsibility AI don't have. So based on that, if you see that some AI implementation will happen, definitely will happen, but it will take its own time. Some in some fields it will happen very quickly. For example, those who are doing the marketing work and all, no, that and all we can quickly replace by AI. But somewhere responsibility is very high and all, it will take some time. See, many companies are there now. So all big companies are doing Alphabet, Microsoft. So many companies are there. OpenAI. Uh, they won't keep responsibility. See, always there is a disclaimer there. Uh, See, whenever we install a software, we used to tick everything. Even in our mobile, no. When we install a WhatsApp, means we will used to tick everything. Something negative happens, means company will never be responsible. You can't ask them, because we are accepting the agreement.
Pay after the pay only you have to get the information.
Yeah.
Free for promoting the business, a business.
Yeah.
So that situation also it is.
That also
it is
will
there.
come. That also will come. Only time will has the answer. This and all, how it will evolve and all. But once the stock price, see the problem with the stock price, no. If there is uncertainty, means valuation will come down. That doesn't mean company will close the business. Uh, in stock market, it's usual. See, there are paper companies, 2, 3 paper companies are listed. Jagran, Prakash, if you see the PE, it is 7 or 8. They still do business and they will, they are making buybacks, giving huge dividends and all. But the valuation will has come down when compared to 20 years back. Because it is said that a newspaper is a dying business. Gradually it will come out. So nobody, there is no future, there is no growth. Similarly, IT companies, because of AI implementation, if some part of that business they are going to lose, if they are going to lose their revenue, means the growth will not be there. Once growth is not there, means valuation will come down. A stock which is trading at a 30 PE, the valuation will come to 20 PE, 15 PE, like that. So that is what it is happening now, which is the derating. That doesn't mean that TCS will close the business completely and Infosys will close the shop, its company. In TCS, 7 lakh people are employed. If they close the business, where they will go? Out of 7 lakh, at least 2 lakh will be having a home loan. What will happen to that? The secondary impact will be very high. Vehicles, big cars and all, who are buying? Only these IT people are buying. Big spending to tour and travels, all these are done by these IT guys only. If IT ends, means then what we will have our secondary impact on our economy. Economy will come to standstill because our economy mostly depend upon this IT people only, because these young person 20, 23 to 24 years people and all earning 5 lakhs, 10 lakhs, 15 lakhs and all they are earning. They simply spend money in bar, in travel, buying big mobile phones. uh, so economy itself will get affected. Suppose if suddenly in next 2 years if it happens,
20, 30.
yeah, valuation will come down. If there is uncertainty, means valuation will come down, sir.
It may recover 10%.
It may recover. Yesterday ADR has come up by 2-3%, but the old rate only after people convinced that AI is not affecting them, means then it will recover. In that also some companies will get benefit. And Bitcoin, if you see now, if you see nobody talks about this cryptocurrency. As I said, no, the social media we can influence billions of people at the same time. When Bitcoin and all going up, everyone was talking about Bitcoin only. And now no one talks about it. It has come down 50% from the peak. From 1 lakh 20,000 dollars, it has come down. Bitcoin has come down, and many other cryptocurrency, it has come down by 80%, 90%, where nobody talks about it. See, a few months back, this CNBC, at 11 to 12, they were having this crypto time. Only they will talking about this cryptocurrency. After they were conducting for many months. From there, many cryptocurrency has fell by 50%, 60%. Now they have stopped that program. So whenever in media, Twitter, Facebook and all, no, if you want to tell something to people, means you can very easily tell. You can influence most of the people. If you keep on telling, means you will feel that it is going to happen. The same thing happened in gold and silver 1 month, 2 months back. The China is stopping exports. Silver huge demand is there. The production is not there, and silver price keeps on going up. You wait and see if there is no movement in silver for the next 2-3 months. No one will talk about the silver in social media. Extreme. This is the silver volatility. It went to 120. From there it fell to 70 range. It came very sharp fall within few trading sessions. Now it has bounced to around 80 levels. It has bounced. See, it's not a point, sir. How many of them bought 1 year back? Many people start. See, silver and gold ETF. I will tell the data. I am having the data. How much money came to gold ETF? Many people. No, in the last 3-4 months only, most retail investors bought in silver.
That always happens because
See,
retailers go enter the market the last.
yeah.
That always happens.
See, we bought silver ETF when it was launched 3 years back. At the time it was 60 rupees. The silver bees was. First time when they launched, no, it was 60 rupees. 1 year it never went up. No one was talking about silver. Only when the rally started, and that was the fag end, it has started. Many people daily we used to get. So many of them were asking that shall I buy silver ETF by selling the entire portfolio. Many people were asking me. See, yesterday one client was asking. He was holding TCS shares for last 20 years. He got allotment in 2005. He was holding for 20 years. So much bonus was allotted to him. He gave in buyback and dividends and all he got. Yesterday he called and told, shall I sell my entire TCS? They are selling that because of AI TCS will close. He asked me yesterday. I'm not an expert on it.
Why it's rising?
Why it is rising? Mainly because of ETF flows.
No, not only that. One more thing is there.
The,
Main thing you're not answering.
I will answer next time. I will talk with you privately. See, the last leg of rally is due to ETF only, sir. There is no doubt about it. Both silver and gold, last leg of peak out rally happened because of ETF flows only. ETF flows means what? Retail money. Retails are buying it. See, this is the central bank gold buy. See, when we ask people why gold was buying, the default answer was that the central bank were buying gold. That is the default answer. It's true. The last 2 years, 3 years back, they were buying it. It's true. But if you see the last year, 2025, it has come down when compared to last 3 years. See, definitely they were buying it. They were buying it. There was sharp increase of central bank buying in the last 3 years. If you leave aside 2025, they were buying huge quantity in 21, 22, 22, 23, 24. They were buying big quantities when compared to previously. In 2000 and all, they were selling it. Now last year, the central buying is lower than previous 3 years. There's a two big demand is for gold is one is the jewelry demand, second is the central bank buying demand. The next one which comes is to the investment buying, mainly through ETFs. Store value are there for the last 6,000 years, sir. It doesn't came in the last 2 years. See, many are saying that gold is there for the last 6,000 years. It will be there. It's true, but in the last 6,000 years, there will be phase for 100 years. Gold price haven't gone up. Whether we will buy gold for next 100 years if it is not going to go up, we won't buy now. See, domestic gold ETF, if you see that for the last 1 year, now it has come to 24,000 crores. Last month, gold ETF inflow in is 24,000 crores in our country. That means who is buying? All retail investors are buying gold ETF. So the number is going up. Whereas the equity, the first time the gold ETF inflow and the equity inflows are almost same. So the last leg of gold and silver rally is because of the retail buying. All these gold, silver and all, no. It's very difficult to project. Suppose tomorrow if Trump attacks Iran, immediately gold and silver price go up by 15-20%. We can't predict it. Yesterday, the day before yesterday, one Bloomberg news came that Russia is again planning to have a dollar related trade. One news came. I don't know whether it's real or not. I don't know. True news or not. Immediately gold price fell by $300. Suppose if Russia compromise with US and they again starts with the dollar trade, means what will happen? All this will fall by 20-30%. So all these are evolving situation. No one can able to predict it. Only thing is that if you are a trader in MCX, means we should see that whether 30% fall in silver price or 20% fall in gold prices, whether we should not lose our entire savings or entire assets. How many people lost money in MCX? One day silver fell by 15 or 20%, it fell in MCX. So many of them lost their entire money. One lot, even if you buy, means how much money we are losing if you are on the wrong foot. Similarly, the counterparty would have made money. Suppose if because of our bad time, if you bought a MCX one lot of silver and overnight it fell very sharply, morning again it fell, means what will happen? Broker will ask to pay the money before 9 o'clock. If he don't pay, means then it will be sold out. Entire 30 lakhs, 40, 50 lakhs, we can lose it in a single night. We don't know what is happening. See, at least in stocks, no. We know that what is the intrinsic value. Hindustan Lever, we are seeing their product. We know that if not today, tomorrow it will come up. We can hold it with some conviction. What is the fair value of gold? What is the fair value of silver? No one knows. It can fluctuate 30%, 40% here and there. Particularly silver, I am telling. Gold, the volatility will be less.
Silver actually 37, it came to 27, then
Yeah.
23,
Yeah.
then 24, then 22.
Yeah. SIP contribution still very strong, sir. Because of SIP only the domestic money is coming. 31,000 crores per month it is coming. Valuation premium, it has now narrowed to come to the mean. Previously Indian valuation when compared to the emerging markets, no, it was very high. Now it has come to the mean level, around 60% it is there, it has come to there. If you see the emerging market countries, as I said, no, if you are having 10 stocks, one stock which is not doing well means you don't put more money in that. Only the stock which is doing well only you put. And emerging markets, 2025 return, if you see that India is on the bottom of the table. In that currency depreciation is there. Countries which has done very well, Korea, Greece, Hungary, South Africa, all 100%, 80% it has gone up. Brazil 50%, Taiwan 40, all UAE 27, Kuwait 23. India is on the bottom of the table. Then how foreign institutions will come and put money?
Dollar terms, $8%.
Yeah, dollar terms means this currency depreciation will not come. I have to check it. It is in dollar terms or local currency. So that is why you see February, this data was taken day before yesterday, 6,000 crores buy. But yesterday what happened? In a single day they sold it out 7,500 crores. From February 1 to 12 it was 6,000 crores buy. On a single day on 13th they sold 7,500 crores. So it has become minus 1,500. So for our markets to perform, some theme has to come. See, the problem with the foreign institutions, no, they mainly hold the private banks, HDFC Bank, ICICI Bank, then Reliance they are having. Then they have all these IT companies, all big IT companies, Infosys, TCS, HCL Tech, Wipro. These are their large holdings. All these are not doing well. So what will happen? They will continue to sell it. That is why the foreign flows are not coming. If they invest some money in mid and small, it won't get reflected because their major holding is in these stocks only. HDFC Bank, ICICI Bank, and these top IT companies. These are the main holdings of their shares, high market cap shares. So that is why they yesterday 7,500 crores sell. Mostly they would have sold in this IT companies only. They would have sold. They were holding such a huge quantity there. So near term, what we are expecting is that some stability will come into the market, and at least in mid and small cap, we may see some momentum coming back because some companies will start announcing their buyback once the budget is passed, and generally it will be 30-40% premium to current market price. So these stocks may go up by 20-25% will go up. In that way, the broader market may do well. That's what my expectation is. Foreign selling also may stop once the market stabilizes. And foreign activity is the one which we have to watch it closely. Okay. Thank you, sir. That's it.